Good morning, traders. I'm Michael Sabo, Senior Commodities Broker, here with RJO Futures on Tuesday, January 22nd, bringing you some commentary here in the energy markets. So let's get started here with crude oil here. What do we have going on here? Well, Friday, we saw a pretty good push here to the upside. And basically the market held on to quite a bit of those gains. We saw it yesterday here being a holiday, small electronic session, quiet, and so far here today, really relatively quiet. It was a little weaker this morning, currently a little firmer here. We're up about 14 cents. Remember, we're focused on the March crude oil now. We're trading right around about 96.18. So a little bit of two-sided action, but not much going on so far an inside day. A pretty small overall trading range. Brent's also just a touch firmer here. We're up about 15 cents at around 111.87. Taking a look at nat gas, that is a little bit weaker. Saw impressive moves there last week, and that's off just a little bit right now. We're off about 2 to 3 cents, sitting around about 353.60. And we've got the RBOB up right now. We're up about 2.5 cents, just above 282. And the heat's also a bit firmer, but that's only up about 0.5 cent right now, trading around 305.80. So, taking a look at some of the fundamentals, what do we have going on here? What's kind of helping keep this crude up here at this point? Well, as many of you know, I've been talking about in these previous posts, I like crude to the short side. And I think you've got to be looking at that from a trader's perspective. Short-term technical indicators are very overbought. But with that being said, take a look at the US dollar. A little bit weaker here this morning. That's being supportive to crude. Bank of Japan coming out. Open-ended quantitative easing. So in other words, they're just going to keep the printing presses rolling, keep the money flowing. They're targeting 2% inflation rate. So you've got a lot of excess money coming into the market here. So that's seen as a little bit supportive here to the markets. In addition to that, you take a look at our own U.S. equities market. We saw firmer tone there last week. Touch firmer here today. I mean, S&Ps were just underneath 1,500 levels. So, I think that's also lending a little bit of support to the market. But with that being said, crude prices are not really just taking off here to the upside. I think the move here to the upside, in my opinion, I think we're pretty close to a potential top here in that market. So I think if you're on the long side, be cautious, protect yourself here to the downside. If you're looking for, to play this thing here to the downside, give me a call. I can talk to you. Get some different types of short-term trading strategies as well as longer-term trading strategies to try and take advantage of this market pulling back. Remember, the key to a lot of commodity markets is supply and demand. And we know from the supply side of things in this market, there seems to be ample amount of supply out there. Demand, still very questionable as to where we're going to be heading. I talked about that in some of my previous posts. And although we've seen, the IEA and the EIA come a little bit closer together here with their projections here for this year, there's still a lot of uncertainty out there. So, I think right now, again, short-term technical indicators are telling us the market is pretty overbought at these levels. I think trying to play this market on the downside is what traders should be taking a look at. Give me a call, though. We can get into more detail, discuss some different trading strategies and opportunities in that market. The number and my email address are posted there on the screen. And remember that futures trading might not be suitable for all traders. It can involve a substantial amount of risk. Good luck and good trading.